Right, so cyber insurance. Why am I talking about cyber insurance? It's a good question. vArmour, who you may or may not be aware, is actually a data center security company. And we were looking at talking about various things to organizations and highlighting stuff. This presentation was actually given at RSA last week by one of our other team members. And it was very well received. A lot of people are interested in this area, and it's something that people are looking for. So we thought it would be good to share. Whilst not a cyber insurance expert myself, this is something that's been well researched and worked with cyber insurance experts. So hopefully we can have some good conversation on it and also discuss a few areas. So, what are we going to talk about? Insurance challenges in the market today. Why should you invest in cyber insurance? Those are all sort of questions that you'll be looking for. Cyber risk assessment, coverage items. What sorts of covers should you be looking for? What are the areas that you'll need to look for? And why would insurance be a catalyst for security? What's the reasoning behind it that you think it will actually help security move forward? And a couple of predictions. Where do we think cybersecurity is going to go to? What are the sorts of things that cybersecurity insurance is developing? Because let's be honest, it's still fairly immature. It's not something that is very well defined today. What are the sorts of things that we'll be finding that the insurers will be looking for, both to insure you and also that you would need to do to be insured? So cyber insurance today is actually a bit of a challenge. It's very, very static, as it says. If you look at the way that cyber insurance is done, it's very much about questionnaires. It's very much about, do you have antivirus? Do you have a firewall policy? Do you do this? Do you do the other? It's not something that reflects today, in our opinion, the dynamic nature of cyber. We all know that cyber goes up and down in terms of risk. We all know that as an area, it's something that is not a static entity. It's not like an MOT. You're not going to check your car, pass the MOT, and know that for the next 12 months the wheels aren't going to fall off. In the cyberspace, the actual threat landscape is constantly evolving. We know that there can be new actors, we know there can be new threats, we know that we can have stuff come out from the side that we were never even expecting. Vulnerabilities, weaknesses, stuff like that. So how can we get a nice, clear definition of the elements that we're going to insure and do it in such a way that the insurers can underwrite it effectively? The risk aggregation is global, it's not local. When they're actually insuring this stuff, it's very much about the overall market. Limited capacity, it's still an immature market. There's more investment needed, more people to start running cyber insurance areas. And the visibility on risk likelihood by vertical, more visibility in terms of specific markets. Certain markets may be more at risk, some markets may not be at risk. And how do you measure the current assurance level? How do you actually go into an organization? Filling in a questionnaire is not necessarily going to be a true reflection of what it really exists within that organization and how that organization can actually be insured. For example, transformational programs driving stuff into the software-defined data center. This is something that's very much key at the moment. It's something that needs to be secured. You need to have that security in there. But a lot of organizations are being driven by the organization to actually deliver through the CIO the ability to manipulate data far more and using SDDC to do that. But the security teams are trying to play catch-up to actually implement the policies that, whilst in the physical world, were things that they could do relatively easily, in the virtual world, they're struggling to do so because the technologies that they're trying to migrate from the outside to the inside won't do so. And pricing, how do they actually price this? So historically, as I say, assessments were very much a questionnaire, a phone call, an interview. Tell me about your business. Tell me how it fits. Tell me what it is. Is there anyone within your organizations today that has an absolutely crystal clear view of your cyber security stance? Okay? There's a great joke that I have when I'm talking to customers, and it usually gets a nervous laugh, and it may do today, you never know. You talk to an organization and you talk about security and you say assets, technologies, things like this, and you say, of course, your CMDB is up to date, isn't it? And they go, and you know that it isn't, and they know it isn't, but they live with it. They don't have the visibility, they don't have the ability to keep on top of what's actually going on within their business. So to actually start underwriting against a fixed questionnaire at a point in time is something that the cyber insurance companies are a little bit nervous of. They don't want to start taking risks with something that is possibly even based on incomplete data. So they're going to look for ways to overcome that. The static approach is irrelevant. It's too much of a moment in time. I may be doing blasphemy here, but if you think about things like PCI audits, I think everyone in the room will agree it is a moment in time. Okay, you have passed on this date at this time to this quality, to this level of assurance with this evidence. Next week may have all changed. And the same sort of thing applies with the cyber insurance space, because you're expecting insurance over a period of time. You're not expecting it at that point. And in fact, stuff may have happened before, we'll talk about this in a little bit, that has a direct impact on your stance today that you're not even aware of. So you're ticking your boxes and you're filling the forms and going, yeah, we're good, okay, I understand this. Phew, I've got cyber insurance now. But actually, you may not do, because if the evidence is flawed, you may have some challenges. Insurers are looking at tools to predict and monitor threat landscapes for organisations. Who here owns an Apple Watch? Hi. That'll be two of us. Damn. Keep that in the back of your mind, okay? Who owns a Fitbit? Let's try that. Hey, got Fitbits. Good. Okay. Not Fitbit. But, that kind of technology is something that, think about that in its terms of what it's owning, what it's holding, what it knows about you. We'll come back to this later, but think about it in an organisational context. What information is held on this that from a health point of view would actually be mirrored potentially in what organisations may be asked for from a cyber point of view in order to be insured. We'll come back to that. Aggregation is basically, it's not one company, it's groups of companies. If we get things like heartbleeds or vulnerabilities or weaknesses or DDoS against a large organisation that maybe hosts everything else, the aggregation of the risk is actually compounded. Somebody using the same system, the same service provider, the same hosting company can be affected as badly, if not worse, than others, depending on the type of business they do within that environment. You may host something within insert provider here, cloud provider, hosting provider, whatever. I'm not choosing individual ones. But the way you run your business in the cloud may be significantly different to the way that someone else runs it. The impact upon you could be far greater than somebody who simply has it as a marketing page. So when you're actually looking at how these things are going to be assessed and insured, all that sort of stuff has to be taken into account, but the aggregation is the same. And the impacts that result from that, of being affected by something, will not be so good. As the cloud becomes ubiquitous, one attack could impact multiple people, and the insurance industry will be expected to pay out regardless. The capacity refers to the insurance pool. So as you're probably aware, when you insure stuff, it all goes into a pool. We've all seen our premiums go up. We all know that as more people take out insurance or the risks get higher, then the pool needs to grow to potentially support it, in which case they need more money in it. Whilst I can't confirm it, whilst I was out at RSA, I was being told that the insurance pool for cyber insurance at the moment was somewhere, and once again, I can't confirm this, this was hearsay in a bar during RSA with a bunch of other people, somewhere between 300 and 500 million, which actually isn't a lot. But that may well be a reflection on the immaturity of the marketplace. If people aren't actually putting the payments into the insurance policy, then there isn't going to be such a big pool to pay out from. And yet we're seeing some of these large enterprises going in and asking for $5, $10, $100 million, pounds, whatever it may be, not yen, insurance payouts or policies. So how is that going to be supported? And the policies are going to have to reflect that. And it becomes a risk to the insurers that there may not be sufficient pool to cover the risk. It only dates back to '98, so the actuarial data, the stuff that, that they base the insurance on, is limited. Other areas are much more well defined, unfortunately. I have a 20-year-old son. I also have a Ford Cooper, Mini Cooper, soft top, really good. A friend of mine was very kind, by the way. He said when I drive, I probably look like Noddy. But anyway, if I tried to add my son to my car, it was an extra, as a learner, him, not me, £3,500 a year. I'm like, wow. That's based on actuarial data. Unfortunately, 20-year-old males have an invariable habit of ending up in field wrapped around lampposts or worse. And so the insurance organisations will say, you're a bad risk, you will be paying a lot more because actually the chances are, we're going to have to pay you something. The cyber insurance company is still struggling, or building, shall we say, building's a better word, to actually get that actuarial data that means they can accurately predict likelihood of these things happening and hence make the right and appropriate payments or charges to support the pool within it. So how do you actually do it? What are the metrics? What's the frequency? How often does personally identifiable information or personal health information go missing? What's the destruction? What's the problem? What are the areas that they're looking for? How do you actually measure the risk in cyber? If you go back 4 years, or I think it's 5 years, you'll go, well, things were, firewalls and hackers and stuff like that. This is before things like massive DDoS attacks. Organisations being taken out in a blaze of internet traffic. Okay? By the way, I've had a lot of fun with DDoS in the past, but that's another story. That kind of element makes it very difficult. So we are now on what, March the 10th? What's going to happen on June the 15th this year? Any guesses? It's a good one. It's my birthday. We don't know what's going to happen on June the 15th besides that. We have no idea. We cannot foresee what will happen to the point where you could underwrite it and say, this is something that I guarantee is going to happen, therefore I can accurately assess with a metric that this will take place. Not great for the insurers. So once again, the immaturity of the market potentially shines through, and they have to think about more of how they can underwrite this and what sort of areas they need to focus on. When they're looking at the organisations that they want to insure, they're looking more at culture at the moment. It's more sort of soft stuff. It's not really metric driven. It's, do they say the right things? Have they got the right stuff? Can we be reasonably confident in what they're doing that we can underwrite this because the organisation itself is strong enough to have put those things in place? Industry, revenue, geography, various things like that. I know from past experience that you can have a very small company, but it has a significant cyber risk. I know of one instance where an organisation was like 10 people, but because they had a huge following online, it was a teen social site, that organisation would regularly be deluged with things like spam. Completely disproportionate to the number of people within the organisation. So there's no direct correlation between the number of employees within an organisation and the likelihood of cyber risk that I can hang it on. Geography, yes, okay, that's probably useful. Vertical, yes, okay, that's also useful. The amounts of investment that people are making, the value of the data, information like that is all things that they can start to use, but they need to work out how this can be done. They need to think a little bit more about how that will happen. Thank you. So 10 reasons to invest in cyber insurance. I'm not going to read them all out because we're going to go through them. This one I find really interesting, okay? Organisations today are expected to do battle one-to-one with these sorts of negative organisations. Nation state, hacking groups, Syrian army, lizard squad, it's a face made for radio, various other organisations. US organisations are expected to battle them. You are expected to have the right people in the right place with the right tools to fight these off. Okay? That's why the security market's so large. We're all trying to address this. It's a tough one. We all know it is. We all count ourselves as security professionals, but we all know that in order to have success, it's not just the technology, it's the people, it's the process. All of these things have to come together to be successful, and probably in no other area are you more expected to do that by your customers and your partners and your employees, because actually their data's in there too, than cyber. Something to think about. Target industries. This is from the recent Mandiant trends, obviously an eye test from that distance. The red one is financial services and insurance, shows up 10%. Okay, I don't know if the slides go out, but suffice to say, if you look at the Mandiant website, FireEye website, you can find the report. There's some always interesting metrics in there, stuff that helps to underpin some of the conversations that you can have within your organisation. But suffice to say, nobody is really immune from it. Agriculture and forestry, perhaps a good job to go into. 1% might have a quieter life. All right, those of you in finance, career change, maybe, don't know. But all of them are affected. Healthcare, construction, biometrics, transports, legal, business. There isn't really an area that isn't affected by some form of cyber. And if you look, the attitudes that have taken place within the industry or within the market is not so much about prevention, it's more about recovery. Organisations are much more consistent in their thinking when they don't sit there and go, yeah, we're going to block it at the edge. They're much more about, well, actually, when it happens, we'll do this. We'll call these people in. These are the companies that we have. And that sort of response is definitely heading in the right direction. Cybersecurity is a governance issue for boards. We know that. Okay, board members can be accountable, and they're now starting to look at cyber insurance as a way of transferring some of that risk. If I can have somebody underwrite the risk against my organisation and give me money, I can put that towards the cost of recovery. Things like brand, not so much, very difficult to measure. You're not really going to get a number on that. But you will certainly be able to say, look, this happened, I'm going to call on my insurer, they're going to pay this much out. It will help because. You've still got to solve the problem yourselves, but that will help. It's the entire enterprise, not just the IT department. Security, as I'm sure any of you who are in an enterprise know, is not just educating the guys in the IT department, it's educating HR, it's marketing, it's the developers. Oh, the developers. How do you get these guys to do the right thing at the right time? How do you get them to control their data? How do they put the data in the right place? Why did you put that source code up on GitHub? All of these sorts of things that people are smiling in the audience, by the way. I may be touching a nerve on a couple of these things, but these are the sorts of things that companies are having to deal with. And you need to think about it. Collaboration, due diligence, underwriting, etc. The Institute directors said that 20% of those surveyed hold cyber insurance. 21% of the directors weren't sure. Maybe they weren't in the IT department. Maybe they didn't have it. The interesting thing is they're saying next year, this is the IOD, it's going to be 90%. Wow. That's a huge jump. Now that's really going to float the pool. That's really going to add some money into that money pot for cyber insurance. So that's actually pretty good news for the insurance industry. Hopefully we won't need to call on it. UK government expectations, so cyber essentials. Okay, organisations are looking at meeting cyber essentials. It's actually quite challenging for some organisations to get there. And also things like the National Cyber Awareness course. I've seen it said that for cyber insurance for an organisation, they are expecting people within that organisation to have passed the National Cyber Awareness course as a measure. Oh, it's a metric. Insurers go wild. They've got something they can measure. Have you done this? Are you this? Do you have this? That culture thing we mentioned earlier, I think it's tied into that. If a company has cyber essentials and they have the National Cyber Awareness course, I can insure them because the chances are they get it. They understand it. They're not just looking to insurance. Oh yeah, I had a breach, pay me. Yeah? They're looking at how they can actually leverage that. So the report, UK Cybersecurity, the role of insurance in managing and mitigating risk, in May said 52% of CEOs believe they have cover, where in fact less than 10% do. And 2% actual penetration of standalone insurance products in the UK for large businesses. There's not a lot out there, but it is growing. And I think the cyber insurance market is one of those areas that is going to mature and develop. We'll have multiple players. It will get competitive. This is really good. This is good stuff. Okay? Yes, we could do with stopping the problem in the first place, but the cyber insurance place is definitely developing. Thank you. Animated carrot. Even though they failed to pass legislation, legislators want to give more legitimacy. They're trying to say you need cyber insurance because actually it helps companies recover, and the quicker that a company recovers, the more that they actually make money. Less people go out of work. not unreasonable. How can cyber insurance be a help to organisations? Strong insurance, discounted premiums. Now, the discounted premium piece is interesting. We're starting to see in the US a couple of organisations who are saying, if you work with this group or have this product, then you can get lower cyber insurance, which is interesting. I had a really good conversation with an underwriter literally last week, actually, about this and went, look, these two organisations are offering reduced policy for people who have this. And he went, yeah, they're an exception. Actually, it's still market driven. It's still soft and fluffy. There's not enough in place yet that you can actually hang your hat on and say this is really something that you're going to benefit from if you have Y. They've teamed up together, they're giving you a discount, but actually there's more to do. So I'm like, okay, isn't it a step in the right direction? He's like, well, yeah, but it's still fluffy. So we'll see some of that, but I think until we really see evidence of controls, information, measurements, metrics, etc., that kind of discounting and, if this do that, or if this discount Y, is probably still a little way off. It'll come. We'll talk about that later as well. Evidence of controls is going to be mandatory. Okay? Once again, if we look at something like car insurance, yeah, I crashed my car, pay me the money to replace it, show me the car. Prove it. I'm not just going to make payments based on the fact you tell me. I need some evidence that this has taken place. So how, bearing in mind the lack of visibility that you have within your organisation and the lack of logging and analytics and stuff like that, how are you actually going to go back to the insurer and say, for sure, we were hacked? Okay, it's a challenge. We have work to do. So, third parties being attacked, off-premise, cloud services, stuff like this. It's not just your domain. The attack's taking place on data outside your domain. Lots of people outsource stuff. Lots of people have platform as a service areas. Even though, and we'll talk, this is covered a little bit later as well, but even though the data may not physically be on your premise, it's the data owner, it's still your responsibility. So you need to have those sorts of things in place. Liability, still risk with the enterprise. There you go, it's on the next bullet. I've handed it off to someone else, they're looking after it for me. No, it's yours. Seriously, don't do that. It is yours. All right? You can't just go, his problem, or her problem. It doesn't work that way. You still own the data. Customers have contracted with you, your organisation. If something happens, you do not have the right to go to them and go, I gave it to him. He was supposed to be looking after it. It's what my kids do. Yeah? It's yours. Okay? Need the controls, need the assurance, need the policy, need the measurements. If I move over there, the clicker doesn't work, by the way. So, inside continue to be difficult to prevent. It does provide coverage if it's an inside job, but if it's an exec, probably doesn't. Something to consider. That's a sort of fairly major failing within the company, so actually, they're not really going to cover that. I'm assuming, of course, everyone has wonderful execs, and this is never going to be an issue, but worth noting. Okay? If it's your normal employee, they'll cover it the same way as if it was the outside, but if it's an inside job that involves the executive management, then the cyber insurance companies are going to be less inclined to pay out. It's not a compliance issue. This goes back to a bit to what I talked about earlier. PCI and things like that are a moment in time. Okay? This is an ongoing thing. How do you actually say that I met the standards, but I still got hacked? Okay, we do see this happening. It's an unfortunate thing. We are seeing some fantastic improvements, things like CREST. I really like CREST, by the way. In fact, I'll talk about something on CREST as we come to the end, but that vArmour's doing. But it's intelligence-driven pen testing. Marvelous. Not I'm going to run Nessus on it, and if it passes, then everything's fine. Okay? You all know the difference between a pen tester and an assessment tool. Okay? Assessment tool runs against the box, goes, yeah, it's great. Ticked all the boxes, fine. A pen tester stays up late, drinks lots of caffeine, and will worm their way through your organization. You would not rely your organization purely on a testing tool. You would want to red team it. Makes perfect sense. How do you quantify cybersecurity risk to the executive team? How many times can we say, if this happens, then this cost will occur? Organizations will have a risk envelope. They'll have an amount of money that within their organization for the primary risks, it will afford them a buffer, if you like, to pay from. It also means potentially they don't have to lock everything down quite so tight, because if they've got a buffer, they can potentially use it. But it is something that they need to think about. What's the risk envelope? What does the cyber insurance cover? What's my risk envelope plus cyber insurance give me as an organization that in the event I need to do something, I can actually call on it? It may solve the problem. It may also help with the implementation of implementing controls and policies to reduce the overall risk. Organizations are always looking at good, easy ways to increase the security within their organizations, their data centers, whatever it may be. But they need to have a way of measuring that to go to the board, the CFO, not the FCO, that's a different organisation, to say, if I spend this amount of money, it will do us this much good. It's called a business case. We all know that. But how do I quantify it? If I implement this technology, what does it afford me in terms of reduced risk? And can I actually measure that to the point where I can use it in a business case that says, if I spend X, my risk envelope goes down by Y? It's actually quite a mature thing to do within an organisation. It is actually quite tough to do, because you have to have such a handle on what it is you're doing and what your risks are within the organisation to actually be able to do that in a way that's meaningful, that you'll actually get signed off. M&A. Doing a cyber insurance for an M&A is actually not a bad idea. If you think about it. I'm going to take on this company with all its assets. Great. Are you really sure what they've got? You really sure what's lurking inside there? So actually doing a full risk assessment, due diligence, to the demands of cyber insurance gives you an opportunity to assess that organisation in such a way that you can be a bit more confident. Not a bad thing to do. Operational technology, OT and ICS, internet controls, industrial control systems, sorry. Don't limit yourself just to the network, the one that everyone sticks their laptops into. The data center, stuff like this. If you're a manufacturer or you've got control systems or operational technology, that needs to be covered too. How many organizations today have broken the barrier between the ICS systems and the internet? It's convenient. Oh no. Security versus convenience. It's more convenient. We did it because it costs less. We did it because it's easier. We can back it up. We can access it from home. No! Don't do that. But people are doing it. Previously, where systems were air-gapped, still running Windows 95, you actually had the opportunity to keep them totally separate. You break those barriers down, and you open up all sorts of nasties to come in through that channel and affect the ICS and OT stuff. So you sort of bought it on yourselves. But if you're going to do cyber insurance, don't just limit it to 10.000. Actually go in and cover the ICS as well. You want to make sure that everything is covered when you look at this. Risk assessment tools and services. So automating risk management, process for cyber insurance. Companies are starting to catch on to this. I had a really good conversation with one of the risk analysis, vulnerability assessment, compliance companies last week. I was chatting with their CEO actually. And we were saying about how there's an opportunity for those kinds of organizations to actually take the stature of an organization that they're measuring, because theoretically they're across the whole thing, so you can do it. And instead of just running a compliance report, actually print out a cyber insurance application form based on the fact that this is how I am. These are the vulnerabilities I don't have or do have, and this is my compliance state. This is my patch level. These are the versions of the antivirus engine running, etc., etc. So there's actually quite an interesting angle there. I'm hoping they'll take us up on it. But automating the process they want to use risk assessment products to deliver a higher level of risk. This goes back to the conversation I had earlier. People with the Apple Watch and Fitbits. Health. You've seen this concept where my heartbeat is so much. In the future, will my health insurance be directly tied to the thing on my wrist? Okay, so my heartbeat actually averages about 65 beats a minute. Okay, which apparently is pretty good, so I'm told. Somebody told me I had the heart of an athlete. Anyway, moving on. My wife sits at about 88. That's her normal resting rate. You can use that. That's a metric. That's a constantly measured metric, or at least every 15 minutes or so, that an organisation, a healthcare provider, for example, could take as being part of the information that they do to assess my ability to have life insurance. So, switch to cyber. Constant assessment of the organisation to see what the state is. I think, and this is one of the predictions at the end, so I'm sort of jumping ahead a little bit, but whatever. I think you're going to see a situation where some of the cyber insurers are actually saying, we're going to take a feed. We want to take information from you, even if it's a high level, that says, to be insured, you will always maintain this level. All right? I know from working in the AV industry that companies would consider themselves globally, so these are like multinationals, to be great if they had more than 90% compliance on AV engine and signatures, which is actually a really low number. Okay? But because it's so difficult to do, they recognise that it has to be that or above. So that's a measure. So can they take that kind of information, and the cyber insurers will actually mitigate risks or underwrite it based on things that are coming out in real time from the organisation? I think that's something that we'll probably start to see. Exclusions are the name of the game, so we're starting to talk more about some of the things that when you do take out cyber insurance to look out for. Exclusion, bad, okay? Insurers will generally try and put something in that protects their risk as well. They're very unlikely to let you do everything, but they will try and put stuff in there. I'm not going to read the text, but suffice to say, you know, if you didn't tell us, we're not going to insure you. Which is actually really difficult, because if we go back to that conversation later, and we'll touch on that again in a second, I may not necessarily know what the state of my organisation is. So how can I do that in full confidence of what's going to happen next? So if we look at the key coverage areas, they will time limit it. So, in the context of the challenge in detecting existing, persistent, by the way, dislike the term APT. All right, personally, who here doesn't like the term APT? Is anyone? Yeah, good. It's not only me. Good. What's important about October the 16th and August the 1st? It's not my birthday, we've already covered that one. Somebody tell me what is important. Today is March the 10th. October the 16th and March the 1st. Does anybody in the room have anything of importance that occurred on or happens on October the 16th or August the 1st? This isn't a trick question. No? Perfect. It's 146 days from now, or to now. And if you read the Mandiant report, the M-Trends report, the number of days that an intrusion goes within an organisation without being detected, if it's an external breach, or being detected externally, is 146 days. October the 16th is 146 days ago. If somebody breached your organisation and you found it today, it could be as long ago as that on average. And actually, if they breached your organisation today, then you're not going to find out about it, on average, until August the 1st. So where they try and put a policy in place that says your policy is in effect from now and only affected by things that take place from now, actually you've got 146 days of crossing your fingers that something that's not already within your organisation isn't going to rear its ugly head. Insurers shouldn't be allowed to attribute it to the whole enterprise because it's a challenge. Okay? Just try and keep it controlled. Try and keep it to specific areas. Limit the coverage items within the organisation and make sure that the executive team is aware. Language that tries to warrant security level is maintained to the same level. We talked about this. Can I guarantee that based with that fluctuation of risks going up and down over time, that I'm always going to have this nice straight line? Going to go over it, going to go under it. The actual compliance levels that you have within your organisation is going to vary. So if you've signed a policy that says, I will always have that 90 dumpty-dump level of compliance, you can't guarantee it. So you need a bit of flexibility there. Leaves it a bit too open to interpretation in the event of a loss. Make sure that it covers the operational technology, SCADA, industrial control systems. We're all aware now, I think, of the power cuts in Ukraine. Okay, good example. That wasn't just the company circuits, the company networks. Choice of counsel. So when you're actually working in legal contexts, make sure you've got a dedicated legal expert, including attorney-client privilege. Negotiating with insurers during an incident doesn't go very well. They've sort of got the upper hand. So how can you actually use that? In some terms of case of counsel, work out who your forensics firms are. Okay, there's some in the room back there. So we know CBEST, we know who those organisations are, that sort of area. You don't want the underwriter telling you who's going to fix your problem. You probably want to have done your own due diligence and decided who is best to actually do that for you and is suited to your market and has an understanding, and you've probably done some work with up front, so if the event should ever happen, they can walk in and go, right, I know him, and him, and her, and I know what to do. Let's get on with it. Good. And it's expensive. Law enforcement. Government tends to be involved in major breaches, okay, especially if you're in certain verticals. So a lot of organisations don't actually know that they've been compromised until somebody knocks on the door and goes, did you know you're doing this? I think 300, yeah, we've got it down the bottom here. External sources is 53% of incidents, a median of 320 days. Wow, that's nearly a year. Remember that thing about don't take out policies that start from there? Yeah, that one. Well, this one. Internal, 47% of incidents are internal and a median of 56 days. Average 146. So, second point on there is on occasion the need to observe an incident. If you have a cyber incident, it may well be that people that you're working with ask you politely to observe it rather than actually block it, because there's something else going on, or you need to know more about what's taken place. At that point, you may well not disclose it out. So you need to make sure that you are not obliged to do that, and it invalidates the policy because you've been asked to, and you've chosen to do so. War and terrorism. I think we've all seen insurance policies that say acts of God, war, terrorism, famine, hunger, Facebook, whatever. Can't really do that nowadays. There's too much of it. It's a sad state of affairs, I agree. But with things like nation-state adversaries and some of the areas that are being compromised either for direct exploitation or to be used as a jump point against other organisations, you can't really block it. You need that clause in there. Coverage that addresses the employee or insider as part of acting in isolation of the executive team. Make sure that's covered. And then when renewing, make sure you avoid signing a warranty regarding a circumstance or claim. So you're not going to say, yeah, that's all sorted now. It's not a problem, because if it is a problem, you don't want it coming back to bite you. So why is insurance a catalyst for security? It's a driver. Cyber insurance is a driver for organisations. Meeting the levels of acceptance, as they will be for cyber insurance, and as they are today, is a driver for organisations to up their game. Okay? Shareholder expectations are rising. CEOs are paying attention. They know that stuff is important in this space. Boards don't always understand security and can be a bit nervous. We don't like nervous boards. The board needs to be confident. You need to be able to go to the board and say, my business is secure, my business is underwritten. How can you do this? Regulators are forcing in compliance, and they want to have measurable qualifications as well. How many metrics can we get? This constant assessment, if you like, or frequent assessment of organisations, personally I think is very much going to happen. But that will help you to be more robust in how you approach your organisation. because you know that if you don't meet those goals, that the organisation itself may have challenges in the event of. And they're beginning to incentivise better security. As I said, at the moment, based on the conversation I have, it's still a bit sort of soft and the rest of it. But if you can go to an insurer and go, I have this, this, this and this, to this level, proven evidence, you're going to have a much stronger conversation with them than I need cyber insurance because I'm not really sure what's happening within my company, but I think I'm at risk. Two different ends. So currently it's market driven, not assurance driven. That's the comment. I think that will change. I think as the market develops, I think as we get more information, more continuous intelligence, risk scoring, stuff like that, it will become much more of the norm of organisations in how they are assessed for cyber insurance. The cross benefit is that you can end up with a much fitter organisation in terms of protection by meeting those goals. It is a driver. It is something that you need and it is something that you want to achieve, therefore you will aim for it. Premiums and rates I think will vary. Dynamic. Remember that constantly evolving thing? You may find your policy changed partway through the year because actually all your peer organisations have been attacked, but you haven't. Or so you think. Insurer goes, oh, they've all been attacked. Oh, no. Policy's up, policy's up. Pay more, you're more at risk. Yeah? Not great. Underwriters and security vendors. I think that'll happen. It makes perfect sense to me. I mean, if you're going to have an insurance policy, leverage the vendors to give you maximum visibility about what's taking place. Use it. You know, it's a benefit. That does raise some questions about what data is being shared, and obviously different organisations will be less enthusiastic about the data that's shared between themselves and other third parties, especially if they're overseas or centred overseas. But I can see that sort of thing happening. Insurance brokers will become your new best friend. Maybe. I've never actually heard that up to now, but hey, you never know. If you can use them as a vehicle for change within your organisation or your customers' organisations where you're going in on a consultancy basis, being able to drive the right behaviours through that carrot of offering not only high levels of compliance and security within your organisation, but the ability to underwrite potential risks in certain spaces, that's actually quite a momentum builder for companies, something that they would be interested in. So, finally, think about what we've discussed today. Think about some of the areas. Review your cybersecurity insurance policies. Does anybody in the room have, you may not want to answer this, if you choose to answer this question, does anyone in the room have a cyber insurance policy? Okay, that's either nobody or somebody, but very few. In the next 3 months, think about your risk assessments, appetite with the CEO, Chief Risk Officer. What are the things you can do? Is there an opportunity to underwrite? Meet with the brokers to see if that's possible. And then understand cyber essentials. Okay? It's useful. Understand the National Cyber Awareness course. Okay? These are things that you can benefit your company with. And it sounds like, from what I'm seeing, you may be obliged to have a much better understanding of in order, if you're going to go down the cyber insurance route, to actually do. And then the tools and services to automate, provide risk visibility in your environment. Once again, not just the physical stuff, don't forget the virtual stuff. Right? It's a bit of a black hole at the moment. You're not quite sure what's going on in there. Okay, so add that into. So that pretty much concludes the slide deck. Thank you very much for your time. I hope that was useful.